In today's video, I'm going to be going over NERP. I was probably one of the last to have heard of NERP, if not the last, and likely because I wasn't their target audience. But as far as I understand, NERP launched a few years ago. They sell an algorithm, which is a trading system mainly for Forex, but it also does gold. And their ads are showing returns of anywhere from double digits per month to 5 to 8% per month. It drew in thousands and thousands of users. It was promoted by Kevin Harrington, one of the judges from Shark Tank. And NERP had an issue. Last year, millions of dollars was lost by traders that traded on this algorithm. That's because they experienced a surprise. And many of them are calling that a black swan event. The Bank of Japan, for the first time in something like 17 years, decided to raise their interest rates from negative to somewhere close to zero. And that caught a lot of traders off guard, lost their entire accounts. Those who didn't suffered severe drawdowns. Notice throughout all their content, they're going ready to unlock your trading potential. See how NERP is leading the future of investing. You see trade intelligently, achieve more. It's used in currency, crypto markets. Looks absolutely wonderful, right? You see they're capping the risk at 3.5% per pair, meaning 3.5% per trade, and their overall drawdown at 30%. And that's supposed to be a good thing. They're showing what their various algorithms are performing at. We see win rates of 63%, 68%, and 66% respectively. Drawdowns ranging from just under 5%, which is not too bad, to up to 42%, going back to 2022 of almost 500%, 200%, 262%. And to give some more highlights, that it executes 6,000 trades per month. Notice over here, average holding period of 24 hours per position, on top of pretty mediocre win rates. I mean, really mediocre. Not just in my opinion, but in the financial community. It's also exposing you to overnight global risk. Something could happen in the world while you're sleeping that could drive your position all the way down, and that'll be that. And you could wake up with nothing in your account. In researching NERP, from all the forums I've been seeing and all the chatter everywhere, they used what's called a Martingale approach, at least in some of their algorithms. So what is a Martingale? Martingale is a way of saying every time they lose, they're going to double down on the next trade. And if that loses, they're going to double down on the next one. So you keep doubling down until you finally make a profit and make back all of your money. Everybody knows risk reward. What most people don't account for is probability. So it's a function of risk, reward, and probability. Suppose you're risking $350 on a $10,000 account. After one loss, you're doubling down. The next time you're risking $700, you lose that. You're down a little over $1,000. The next time you're risking $1,400, you lose that. 3 trades in, you're down $2,400, 24% of your account. On the 4th trade, you're risking $2,800. So you're already down 24, you're risking $2,800. You lose that. On the 5th trade, you're risking $5,600. One little problem, you don't have $5,600 to risk because you've already lost more than that in your account. When you're dealing with a system that does not have a high probability to win, is inevitably going to bankrupt you. You're inevitably going to blow up your account. Now let's go over NERP. Remember, 63, 66, and 68% win rates. Now when I asked ChatGPT, what are the chances of something with those kind of win rates of having 5 losses in a row? Within that band, we're looking at 97% to 99.86% certainty that you are going to have 5 losses in a row. So this system, applying Martingale, will inevitably have 5 losses in a row somewhere at some point in time. It will happen. And when it starts doubling down on every single bad trade, sooner or later, you're going to have a situation where the entire account is lost because that's the way it's programmed to work. If you look at this, even if you're at 70%, you still have a 92% chance of losing your entire account. We have a company that's selling algorithms, leading people to believe they can make double-digit returns per month, and these people don't know what they're getting into. From everything I've seen and read, it looks like their default settings used to be no stops. So you would come in with no stop at all. Basically, your risk is infinite. If you don't have a stop, your risk is the entire account until you get stopped out by the system itself automatically. The ones that put in stops, they're subjected to martingale trading, doubling down every time they lose. lose. And as we've seen, 4 losses in a row gets your account to less than half. And on a 5th one, you don't have enough capital to double down. If you just go all in, as they say in poker, you stand a 99% chance of losing your entire account. I'm going to put on my lawyer hat here. Let's go into their disclosures. Let's look at the fine print here of this wonderful, generous algorithm seller that sells you their genius for the low price of $20,000 from everything I heard. Turns out they're not an algorithm seller at all. Turns out they're not even here to make you a ton of money. They're a financial education and software company. They're not here selling you a system. They're here to sell you education. I didn't see anything in the homepage about financial education. I don't see any classes to sign up for. I don't see any webinars. I don't see where they teach you coding. I don't see where they walk you through statistical analysis. Not in their heading, not in their homepage, but they made it very clear in the fine print that nobody reads. We do not sell a business opportunity, get-rich-quick program, or money-making system. All of a sudden, they switched from showing you the results. I just see this guy made a bundle and that guy made a bundle. Sign up with us and you too could make 400%. I don't see them providing coding classes. I don't see them providing any classes on statistical analysis. All I'm seeing is returns. We can make this amount of money, that amount of money. Folks, who do you think they're talking to here? They are talking to the FTC, because when people blow up their accounts and start making complaints, they're going to tell the FTC they're in the education business. They're here to generously educate you, and you're paying them $20,000 to do so. Should you decide to trade live, well, that's your prerogative. Where's the education? We don't know. Is it the blog? I have no idea. Next, please note that some of the results we show may be some of our top performing accounts, and they're not typical. We've been collecting hundreds of MyFX book links from users running our algorithms that are willing and able to provide them since January 2023. So their top performers are getting win rates of 63 to 68%. These are people that have shared with MyFX book. These are people that are bragging about their performance. What about the ones that have lost their money? You think they're bragging about their performance? Do you think maybe they just walked away from everything and are too ashamed to relive those moments? They're too ashamed to tell the world that they lost their entire account? Probably. January 2023, first of all, was not that long ago. If you're going to backtest something, you should go a lot deeper than that. Backtesting to where we've had an exceptional bull run with no sideways or any real kind of downturn. In my book, that's not really sound backtesting, and I'll touch upon backtesting later because I have to question how backtests are being run. It's not what you think. If you're using NinjaTrader, if you're using any kind of software where all you do is press a button and it produces the backtest, I've got news for you. You're looking at very skewed, very warped results. Keep going all the way here, and you have another disclaimer. Simulated or hypothetical performance results have certain inherent limitations, unlike the results shown in actual performance. Understatement of the century. They're basically disclosing that their performance they're showing is also a simulation. They're not putting their own money on the line. And this leads me to backtesting. I need to bring up a point about backtesting. It's not as simple as simply pressing a button on your NinjaTrader or TradingView and running backtest. You have to account for all the variables in the strategy. You have to put it together. You need to integrate it. Listen carefully. You need to make sure the backtest results are not giving you figures in hindsight. What does that mean? That means, and I can only speak from price action trading perspective, that means if you have an entry in the backtest results, and let's say it's a two-legged pullback second entry going long, you have to verify whether that entry would have occurred or the results are showing themselves as entered because of all of the data collected after the fact. Okay, so a lot of people don't backtest properly. A lot of companies fight you on backtesting. You can go to these algorithm sellers and ask, hey, where are the backtest results? And they'll put up a good fight about it. They'll say, oh, it's not necessary. You go forward test. They might say backtesting is nothing. Well, no, they haven't put it together because it's painstaking. You don't just press a button to get proper backtest results. And truth be told, a lot of them, if they applied their own backtest results, the results would have been abysmal, even in the best case scenario. who are the people behind NERP? How can they be so brazen to sell $20,000 systems that cannot perform and sell them to the general public that either might be too greedy, might be convinced that the system works, or take your pick? I mean, for whatever reason, they're buying it, they're shelling out that kind of money. So let's examine who the people behind NERP are. This is everyone that's on LinkedIn and connected to NERP. Let me just tell you something about this education company. Is just devoted to educating the masses in financial literacy. Yeah, 53 associated members. What do they do? Well, 14 are in sales, another 9 are in business development, which is basically sales. So we're up to 23 out of 53 basically in sales. Another in marketing, hand in hand with sales, so that's at 29. So 29 out of 53 are now in sales. Media and communication, that's sort of sales. Now we're at 32 out of 53 related to sales in some form or fashion. What about their engineers? 2, okay. How many educators? 3. So 5% of this team, roughly, includes the educators. Another 5%, the engineers. I don't know, but a little over 2/3 are the sales team. Wonderful. So let's go into who the folks are behind NERP. Who are these people? We're looking at right now one of their founders, Jeff Seckinger. He's the CEO, building quantitative trading strategies for high net worth individuals and institutions. Trust me when I say this. An institution is not interested in 500% returns over 2 years. An institution is not interested in a 63% win rate with no stop. An institution is really not even interested in Martingale unless it could be justified somehow. They'll take a 500% return in 2 years as long as the risk is balanced, of course. They'll see that as a gift. They're not looking at 30% drawdowns. They're not interested in long shots like this. But here we are, representing that it's strategies for institutions and high net worth individuals. Let me tell you something about high net worth individuals. They worked hard to get up to where they are. They're not interested in a 30-40% drawdown throughout the day. They're not going to put their entire net worth and risk a 40% drawdown. A general partner at Orca, and you can look up Orca yourself. Orca is a registered investment advisor. They're fee-based only, very traditional. My guess is they do not use NERP. On the one hand, you have a CEO that's selling this to retail traders that are blowing up their accounts, while also being a partner at another firm that's servicing high net worth individuals and institutions, taking a flat fee as a registered investment advisor. That speaks volumes. Graduate of University of Kentucky in business. What qualifies Jeff to understand quant analytics? Nothing from this bachelor's degree. A 3.4 in business, University in Kentucky. Not knocking the GPA, it is what it is. Not impressed with it either, by the way, but not knocking it. He's not qualified to know the first thing about quantitative analysis. He's not qualified for it. Next, he's got a Series 66. That's a sales license. A Series 7, also a sales license. Also doesn't qualify. If you're a registered representative, it definitely doesn't qualify you to build an algorithm. As a matter of fact, I got my Series 7 back in 2000. Funny story about that. I actually left the room 2 hours early because I put on a trade in the morning, had a live position. I already graded myself, figured, okay, well, I definitely surpassed the threshold. There's no point in me spending the next 2 hours trying to get like a perfect score or anything like that. You know, you don't get more brownie points for that. But I'm not surprised, but I did struggle trying to find who these engineers are that are a part of this. So from what I could tell, this has to be the most qualified one on their entire team. Her name is Ella Negadari, PhD in financial mathematics. She's had that PhD for almost the last 10 years. Very qualified individual when it comes to risk, quantitative analysis strategies. Looks like she's been around before NERP started. Notice she designed, developed, and launched the dashboard for product licensing. She implemented optimized trading strategies from the ground up. I don't see too much else regarding her. I don't see an opinion given by her. I don't see any content. For all I know, she might just stick around as a figurehead for this company. She did learn machine learning. That's great. She worked in energy trading. That's great. This is the most qualified person on that team. Remember, there are about 2 or 3 engineers. Next one, Marcin Boratinsky has his own company for nearly the last 2 years and works for NERP on contract. I'm guessing he's supplementing income from NERP to build his business, which is fine. Is he qualified as a quant to make these systems? I would say just barely. Okay, yes, he does have a certificate in quantitative finance. He has IT experience. He has a lot of good things going for him. Does he have that statistical background. He's got a computer science degree, but that doesn't give him a statistical background. That's where it falls short. Next guy, interesting character, Yuri Demansky. Yuri looks like they plucked him out of Upwork. Looks like he continues to do freelancing at Upwork. He knows Python. He knows software development. He knows mathematics. Is he qualified as a quant? I wouldn't say he is necessarily. You need a statistical background to be qualified as a quant, which he lacks. Here we have the organizational structure of this company. Their so-called team of developers is not much of a team at all. It's just a few compared to the entire organization. They're a sales team, not educators, not a team of all these fancy quants and statisticians and developers and all that stuff. Those guys, they're the minority. It's a massive sales force to get retail traders on board to buy this algorithm. Some of them are going to make wild money right off the bat. Ultimately, everyone's going to lose it all. They're going to collect all this data, see what they could do about refining the system. But as it stands, whoever's buying it is buying a death sentence for their trading account. That's what they're doing. That's telling the FTC, we're an education company, and they're implying to you, the buyer of the system, you can make wild amounts of money. Over here, we had something different. We had traders going in, and a lot of them lost their accounts, lost everything, because they placed a wrong way bet on the Bank of Japan and their policy toward interest rates. And for the first time in 17 years, the Bank of Japan decided to raise their interest rates from negative to zero. And the ones that are trying to rationalize this are telling themselves, oh, this was a black swan event. The system is still good. People, this is not a black swan event. A central bank on any country, they can raise interest rates, they can lower interest rates, they can keep it as is. That is their entire spectrum. A black swan event would be the prime minister deciding to shut down the Central Bank of Japan, to peg it against a meme coin. Okay, that's a black swan event. These kind of surprises within Forex happen all the time. And on top of that, I have an issue with Forex overall. Forex does not have a centralized system to report accurate prices. When you're getting into a Forex pair, the prices are coming from your dealer. There's going to be minor discrepancies throughout that time among different dealers because there's no centralized system. You're going to have minor discrepancies in the pricing. It could just be a few pips, but those few pips accumulate to shaping up how the chart looks and could influence your decision if you're a price action trader. We're dealing with an inherently flawed chart because of the way pricing works in Forex. We're dealing with a low quality, very mediocre system. Previously did not have stops, they have stops now, but it also has a low win rate and it relies on Martingale. But I'm very surprised that NERP did not make any commentary, any kind of announcement as to what happened. They just swept everything under the rug and moved forward. Very disappointed that Kevin Harrington, whom they've hired to promote them, is on board with this. This is a person. This is not some UGC content creator. It's not some clown. It's not some knucklehead that's just going on TV and acting as a mouthpiece. This is a person that pioneered infomercials. This is a person that's a judge on Shark Tank, is a venture capitalist. He understands risk. He understands profit factors and Sharpe ratios. He's supposed to understand it anyway. And here he is, shamelessly promoting it. Kevin, if you're listening, whoever put you up to this, fire them immediately, get off the sinking ship. It's just unbelievable. This video is not intended to be a stab at NERP, but just a comparison, because for the last couple of years, I've also been developing an algorithm. It took us a while to get to what I would call a quality level. Now with my algorithm, I'll be trading my own money. A 63% win rate, I view that as a failure. I want to see the profit factor. I would watch drawdowns like a hawk. I'm not comfortable losing half my money in one day. The other criteria I had was no overnights at all. The system would go in, it would spot the opportunities based on price action trading, close all positions by the end of the day, no risk of any surprises. I would have never, ever applied Martingale. Never would have even considered not having a stop. I asked myself, if you create a system that's good, why are you selling it? I would not sell it. I told my quant, start your own hedge fund if you want. You do not have permission to sell the system. So if I decide I want to be a system seller, I'm going to have to get a sales team. I'm going to have to devote more toward selling the system than I am toward perfecting the system. It's not the road I want to go down. And the other thing is, just because I sell a system to someone, that doesn't mean that they can replicate the same results. The system that I built is very specific to my risk profile. Some people have more conservative risk profile, others have more risk preferred profile. Bottom line is, my system would not be compatible with other people's preferences. In the future, I'll be showing the backtest results, the algorithm that I've built, along with the quant that I've hired and promoted to partner, a high win rate, a high Sharpe ratio, a high profit factor. Are you interested in investing in something that's institution grade, trades futures with no overnight risk? I'd like to know what your comments are on this. I mean, are you finding this useful? I'd like to know, have you guys traded on NERP? Have you used NERP before? Please drop your comments below. Let me know if you're interested in this content. Do a deeper dive and kind of step away from these algo sellers, such as NERP. I see them as one of the worst actors out there. They're just selling hope and just demolishing dreams and giving others a bad rap. In any case, hope to hear from you, and let's connect on LinkedIn.